Hello, my name is Marty Foreman. I'm a state specialist with the University of Missouri Extension, Ag Business and Policy. In this video, I want to review USDA's March 9th World Ag Supply and Demand Estimates. To summarize this month's report, really there was no change was the theme for U.S. supply demand. USDA made no revisions to corn or soybean supply and demand. So more of a placeholder a month for the WASDE update. Trade was expecting perhaps a slight decline in U.S. corn ending stocks, really driven by maybe an uptick in the export forecast for corn, but that wasn't the case. USDA held exports steady with last month, and as a result, no change in the ending stocks. I think that's resulted in a little bit of price pressure on the corn market over that, but this is really not a fundamentally big change in anything to do with the narrative in the corn or soybean outlook, I think. As far as Brazil and Argentina go, corn production is unchanged from February, with Brazil's crop at 109 million tons and Argentina's corn crop at 47.5 million tons. Some were thinking USDA might trim production slightly given the dryness in Argentina and some of the late corn planting for Brazil's safrinha corn crop. That wasn't the case. Corn production in both countries steady with last month. For soybeans, soybean production actually increased in Brazil. They revised last year's crop up 2.5 million tons, and then also boosted the 21 crop, the crop that they're harvesting now in Brazil, up 1 million tons. Argentina's soybean crop was revised down slightly by 500,000 tons. China's soybean production imports were unchanged. USDA lowered China's use by 1 million tons, while China's corn imports held steady at 24 million tons. There was some thinking perhaps that they might increase China's corn import from that 24 million ton figure. Again, no revision there for China on corn imports. Globally, corn and soybean ending stocks edged up a little bit from February, but not a dramatic change from last month. Shifting specifically to the corn outlook, I want to take a look at the balance sheet. As I mentioned over here in the column under March, really no changes to those forecasts. So we wound up with this ending stocks unchanged from last month at roughly 1.5 billion bushels, or 10.3% of annual use. The price, season average price held at $4.30 per bushel. I really turn attention more to this column on the right-hand side, 21-22 marketing year. And these figures come from USDA's Outlook Forum last month. They released some preliminary estimates for supply and demand for the upcoming growing season crop year. And this is what they have plugged in for planted acres, 92 million. So up 1.2 million in planted acres from last year. And then 179.5 national average corn yield. And that results in a production total at 15.15 billion bushels. So a pretty healthy increase from last year, but with a lower beginning stocks, we wind up with the total supply up about 550 million bushels from last year. You can see here, when we move down to the demand forecast, you've got total use up about 500 million bushels from last year, with increases for feed and residual, corn for ethanol rebounding fairly well from reduced levels of this season, and then another strong year for exports at 2.65 billion bushels. However, you note that there's really not much change in the ending stocks. So ending stocks still wind up at 1.5 to 1.6 billion bushels, or 10.3% of annual use, which is basically steady with the current season. A little bit of pressure on prices, but not much, down to 420 is the forecast for the season average price. I wanted to take a look at the forward curve on the futures. So this is just plotting the futures contracts starting with March, and then the May contract, July, September, December, and then March 2022. You can see we've got an inverse structure here with premiums for the nearby and the more deferred contracts at discounts, especially out here to the new crop. So this is a bit unusual, but it is typical of when you're in this kind of a market environment, when you've got strong demand and tightening supplies. So this kind of fits with the scenario. The question is, will we maintain this kind of a structure or not? There's some discussion in the trade that some of the importers, may try to defer, importing corn in order to take advantage of this inverse and push some of their purchasing, out here to the new crop to try to capture these lower prices for the new crop. One thing I would point out here is we have the December 21 futures contract trading, around the 480, 485 area, and you compare that back to the 420 season average price from USDA. This would imply, even with an adjustment for basis for that 420 cash price relative to the futures, we've probably got 40, maybe 50 cents of premium built into this futures price. So in other words, if the USDA forecast that they put out, from the Outlook forum, calling for that ending stocks around 1.5 to 1.6 billion bushels and that 420 season average price, this would suggest that the December futures, have a downside risk from these levels. So there is some premium built into that new crop price. Also wanted to show you the managed fund position. I think this could be a hazard for prices. We talk about this from time to time, but you can see the blue here is the net position that the funds have in the futures market. So back last summer, they were heavily net short. Now they've moved to a pretty aggressive net long stance with contracts reading over here on the left-hand axis of about 350,000. It hasn't changed a lot in the last few weeks. So they're holding in that area, but they're holding at a fairly high level. The red line is the weekly corn price and the nearby futures contract. So as you can see, as the funds move to the long side, it helped support this price rally. So the concern would be, as the prices do turn down, that the funds may begin to liquidate some of this long position that they've built up, and put added pressure on the market if they were to come out of this fairly significant net long position. I would this isn't the highest ever. If you go back 8-9 years ago, we've had they had net long of well over 400,000 contracts, but nonetheless, this is a sizable position and would run the risk of pressuring prices if they were to start to unwind it. Looking at the May futures contract, you can see here the high back in February coincided with the February WASDE report. And then since then, we've really been more or less in a fairly choppy trading range affair, from about, say, 430 to 460 on the upside. This low from February is, 530 to 560. And this low back here is 523. So I think that's a fairly key support level. If we see that, if we see the market break below that level, that'd be I think the first indication that we're probably in for a little deeper pullback, probably at least back to this 5 to say 490 area, kind of a retest of that late January low. On the other hand, if we can push over 560, certainly close over about 565, would open the door for some follow through to the upside. So I think we need to see one of those levels on the downside broken, or a move to new highs to kind of reinforce this longer term uptrend in prices. You can see the momentum. This is an RSI, this is a momentum indicator. We've been kind of waning on the momentum here. We've got some divergence between prices and momentum, which is can be a sign of a peak in prices. So we need to keep a close watch on how this market behaves. I suspect from a fundamental point of view, we're not likely to see prices break too dramatically until we get past the next set of reports from USDA at the end of the month. On the monthly chart, this goes back 10 years or so, and you can see how market has rebounded from the lows late last summer. We've achieved this 50% retracement of this entire down move from the 2012 high to the low last year. So we've met that, more or less met that target. The next upside target is up here in the 62% retracement, which is a 643 on the nearby futures. Probably going to take some kind of a problem with, say, Brazil's safrinha crop in the next month or two to drive this, or some kind of issue with our planting season, upcoming planting season. I guess to summarize, Brazil's corn production is projected to be up 7%. However, most of the growing season in Brazil is still ahead. They're about 50% planted in Brazil versus 30% the previous week, and that compares to a 5-year average of 80%. So we're running about 30 points behind the average pace of planting that winter crop, which makes up 75% of Brazil's total production, roughly. So a little bit of a late start adds some to the production risk as they head into later in the season, when you tend to have a little more drier pattern as that crop moves into the pollination stage. Argentina's crop's under some pressure from dryness. We haven't seen a big reduction in their forecasted production, but they've had seen dryness on and off down there. Some relief in the forecast in terms of additional moisture. So we'll have to see how that unfolds. China's corn imports is another key factor. Right now, China has got about 460 million bushels of corn that's been sold but hasn't been shipped yet. They've also a significant portion of designated unknown outstanding sales that are probably to China. So you can come up with a number close to 575, maybe 600 million bushels of corn that is probably headed to China, but has not been shipped yet. So, what's the status of those? Is there any chance that some of those sales could be canceled? That would be clearly negative. It appears that we hear rumors of more Chinese buying, but we haven't seen any announcements recently for new sales. Again, the Prospective Plantings Report and the March 1 Stocks Report are out on March 31st. Especially the stocks report. The last couple of stocks reports have come in well below trade expectations. So we've seen a positive price response to that report. So we'll have to see how that plays out. We could see, keep an eye on the market around the March 31st reports, because we have seen some surprises in terms of those stocks numbers, especially for corn. As we get into the planting season, we've got a fair amount of dryness across the western and northwestern corn belt. That could lead to favorable planting conditions, at least initially. We'll have to see how that plays out as we move deeper into the growing season. But starting out with fairly dry soils across a large portion of the western corn belt. And as we just discussed, the funds are holding a large net long position that could lead to some liquidation if we see prices come under some pressure. Turning to the soybean outlook, this is the balance sheet for soybeans. And again, USDA made no revisions on the demand side. We still have ending stocks projected at 120 million bushels. This is essentially pipeline supply. stocks to use at below 3%. So very, very tight supply situation for soybeans. Again, we've plugged in USDA's projections from the Ag Outlook Forum last month, and their preliminary estimate for planted area is up at 90 million acres. Nearly 7 million acre increase from last year. And then again, with the national average yield at 50.8 bushels an acre, gives you a crop of a little over 4.5 billion bushels. However, you can see the difference in the beginning stock. So it translates into total supply actually down slightly from the current marketing year. And then on the demand side, steady to a little bit lower use, continued strong crush, really pretty strong exports, although down from their projection for this year. So we wind up with ending stocks around 145 million bushels, or just over 3% stocks to use, and a season average price of 11.25. So this is still a very tight situation for soybeans, even with this large increase in soybean area. This is a graph of prices and ending stocks. So the red line is the season average price received by farmers, and you're reading that over here on the left-hand axis. And then this is the stocks to use. So you can see that this is this year at 2.6. So really the tightest in at least going back to 1990, 91, and then only a very modest recovery, even with the trend line yields and the increase in area for next year. So it looks like we're facing a fairly tight situation for beans unless area is up a lot more, or we have a big, a much stronger than normal trend line yields. Looking at the May futures price, you see how the market has really kind of been consolidating in a fairly narrow range. We've been testing these highs from early in the year around 14.33. We spiked above that briefly, but really haven't seen any significant follow through. This black line's 40-day moving average, and it coincides with this little uptrend support line from this kind of triangle type pattern that we've got on the futures market. So I suspect so far the market hasn't done anything to suggest that it's put the high in. We've just pushed through to new highs, but so far I haven't seen the follow through. And I guess similar to corn, if we break below these recent lows here, say 1385, 1375, that would probably set the stage for a deeper pullback to retest this low from January around $13. So if we're going to see a deeper correction, probably need to see something below 1375.85 to signal a setback to retest this low back here in January, and probably need to see something below $13 to really kind of break this overall longer term uptrend in prices. And again, if we could push back over 1450 or so, then that just renews the uptrend, and that's probably sets us on path for the 50-cent rally or so. You can see here, this is the monthly nearby futures going back to 2013-14 highs. So that would really probably be our next upside target from a technical point of view for the market to challenge. So to summarize the soybean outlook, we've got Brazilian production forecast up 4% from last year, but wet weather and harvest delays are raising some concern about the quality of the beans in Brazil. Argentina's crop is projected to be down 3% from a year ago, and again, related to some of that dryness that we've seen on and off through their growing season. Also note that U.S. export commitments are at 98% of the export forecast. So there's really not much room to export many more soybeans. So commitments are, basically at the threshold. So we're kind of at the inflection point where we'll start to see, China's buying a shift. It's got unshipped, corn or unshipped soybeans to export, but a lot of the new buying is now focused on South America. Domestically, though, we do have a strong crush pace. We've got soybean planting intentions up near 90 million acres, but even with that large increase in acres, stocks look like they're going to remain tight. The macroeconomic outlook's been providing underlying support, so we've seen strength in the crude oil and the stock market. So the positive economic signs are kind of a tailwind for our ag markets. One final comment here. This is the futures looking at November soybeans versus December corn. This price ratio has been moving up pretty consistently from about a year ago now, and it's moved all the way up here to roughly about 2.6 to 1. So with a ratio on this soybeans to corn at 2.6 or so, this favors soybeans. At this point, a neutral number would be more like 2.3, 2.4, more of a neutral zone. Doesn't favor either crop too much. But as we move over 2.5 up to 2.6 and higher, I've seen this this ratio move all the way to 3 to 1, which clearly favors soybeans quite strongly. But the market is signaling to farmers or encouraging them to boost their soybean acres. And it's this is not, I guess, unexpected given balance sheet with the forecast for stocks to remain pretty tight next year. So the market seems to be doing its job in terms of encouraging farmers to boost their soybean plantings. This is the numbers from or the history on the corn and soybean acres. You can see here plugged in the forecast from the Outlook form with corn at 92 million and soybeans at 90 million. You can see the big increase from the last couple of years, especially for soybeans. We've had a lot of prevent planting the last couple of years, so there is plenty of room for both of these to increase from last year. So with that does it for this month's update. Thank you for watching.